Well, good afternoon, everyone. It's 1:45 here in the UK, and as you can see, just 45 minutes before the American Open, that's the close of the American market last night on the 9th, Monday the 9th. It was a big down day, and as you can see, S&P down 132 points, but I'm sure I don't have to tell you that. All of the trends on Vector Vest on both sides of the Atlantic are down from short term to long term, and the proprietary Vector Vest buy-sell ratio right down on its knees at 0.07. So this market has been really beaten down, folks, as you well know. So is it a crash, or are we going to see a bounce? Let's have a look. That's the daily chart of the SPX, and as you can see, it's closed below these lows. The Nasdaq on Friday, the Nasdaq closed below this low, the yearly low, but the SPX didn't. Well, that certainly cracked yesterday. So what I've done is I've put up two charts, and I would like you to have a go at doing these for yourself, because this is the 24-hour S&P 500 on a 4-hour chart, and I've drawn in two equidistant channels that I think are important. I've done my best to draw them well as best as I can, and this is the big equidistant channel, or Tramlines, some people call them, since the high way back here at the start of the year. So I've just drawn a line between here and here and taken a parallel line, and if you've ever looked at a book by a fellow called Giler in the 1960s, he was the first person to talk about the power of channels, at least one of the first persons that I tripped over in my journey. I've then drawn a smaller channel here on this last little down, and they're all coming together somewhere down about here. Now, because there's spikes in these, it's so difficult to know where to draw the darn things, because not a lot of volume may have been done in these spikes, and they may have been discounted by the people who really control these markets. We've got a bit of a rally on our hands this morning. Now, those are the lows, and based on this construction, it's saying it needs to go down a little bit. And I wouldn't be at all surprised to see another slam down, folks. When the rally does occur, it's going to be a fierce, probably short covering rally. And it's going to move up with pace. There will be money to be made for those brave 2 to 3, 4 day traders. But this certainly must be looked upon as a rally in a bear market until it proves itself to the contrary. If we look at the hourly chart now, this is the hourly chart, and that's that channel that I drew a while back. It goes somewhere down around here. But if we take a Fibonacci, if I blow this out a little bit, you can see the channel, the previous channel from there to there, down to there. It's got a target somewhere down below yesterday's low. And the bigger channel has got a target somewhere down yesterday's low as well. Now, if I take a 1.618 extension of the last meaningful pullback, it's got a target of a 3913. So this bottom could be in, but I think that we could easily see a slam down to 3913. So what will I be doing? Okay, well, I missed a very good setup yesterday because it happened just a bit too early. I hate charts that have got too much stuff on them. Yesterday morning, in fact, there was an upthrust just here. And you could see it clearly on the 30-minute chart, maybe a little bit better. And it happened too early in the day. There was the trend line. There's a little bit of support there. It goes up and kisses it, and goes up and then changes its mind and falls. And there was a really nice 40 or 50 points in that, but it happened about 7:30 in the morning, and I wasn't, on a Monday morning, I wasn't up and about and focused at that time. As it came right down, and then in the afternoon it was sold in, this support became resistance, and then you know what happened yesterday afternoon. Now, we could easily be seeing the same thing here again. So, folks, if I saw a push up through this high and a reversal, I shall be shorting it again today. We shall see. We shall see, because there could be an upthrust on the way. I'm unsure as to whether we've got a temporary bottom at those channels that I drew a moment ago, or have we got another leg down and then a bounce. A bounce will occur, ladies and gentlemen, and those people that have got a bottom fishing watch list should be waiting for what we at VectorVest call the blast off day, and that's pretty much a daily confirmation on really good volume. Have a look at the SPY for the volume, folks. It's a very clear indication of volume, so a big up day on really strong volume on the SPY, the tracker, would be something that I'd be looking for. However, it will probably be a rally in a bear market. That rally can last quite a long time. It can be a very tradable move, but the facts are the trends are down. The market has been absolutely annihilated in terms of market breadth, and you need to be very careful in there. The longer term VectorVest signals, such as the DEW signal, which we call a medium term signal, and the confirmed calls, which are a longer term position trading system, have got a lot of work to do. A hell of a lot of work to do before they give a buy signal. So anything over the next day or two has to be regarded as a bottom fishing, very aggressive opportunity for those people who can manage risk very carefully indeed. As I've said 100 times in these videos, down much below these levels, then there is one hell of a lot of fresh air. So those channels, and have a go at drawing in those channels for yourself. Your efforts may be more accurate than mine, but certainly if those levels were to fail, folks, then we are in a very serious situation. The market doesn't care. If you are short, it's great. If you are long, it's miserable. The market doesn't care. The market is like snow in the winter time. The kids love it because they get off school, and the parents hate it because they spend their days drying out shoes in front of the fire. Such a thing exists anymore. The snow doesn't care. It's just there. So just be very careful going into today. My strategy is that I'm going to be looking for certainly on the 30-minute chart or the early chart, a big reversal bar up around this level for another short. I could be wrong, but my objective is to risk a little bit to make a lot. I have no idea what's going to happen next. All I can do is to try and maximize my risk to reward ratio, where I can risk £1 to make £2 or £3 and keep that turning. So I hope you find this useful, and I'll try and do as many of these as I can. I think that we're close, but we could see another slam down before we get this rally. Thanks very much. Bye.